So if you're thinking about buying a property and you're about to get a mortgage, you must be thinking, should I get mortgage insurance or pay 20% deposit to avoid mortgage insurance? This video addresses that question. So going to my notes, is LMI worth it? And first of all, you must be thinking, you bloody noobs, the fuck is LMI, right? Lender's mortgage insurance. Basically, you want to buy a home. So it's a house, a townhouse, villa, whatever it is. After you're thinking, hey, I want to buy this property, and then you need to get a mortgage from the bank because obviously you're not going to use all your cash to buy the property. So in the world of the banking world, they'll lend you 80%. So when they lend you 80%, you got to fork in 20% deposit. If you're a first home buyer, maybe you're exempt from stamp duty, but if you're an investor, you're going to pay stamp duty, but you need to have 20% deposit plus stamp duty. In terms of the bank, when they borrow money to you, you fall in two categories, which is if you have 20% deposit, then I trust you. They're like, I trust you, sweet, I'll give you 80% because you came up with 20%. But what happens when you don't have 20% or you don't want to forego 20% deposit and you want to pay maybe 5-10% deposit? Well, you fall into the second category, which is the bank will say, I trust you, but you look fucking shady. And because you have less than 20% deposit, you must buy mortgage insurance. Basically, it's insurance the bank forces you to buy in order for them to lend you over 80% of the property price. And what happens is you then go into this little plumbing thing like, let's go Mario. Then you go into this tunnel thing and then you head over to the shady LMI world, which is, think about Mario. And when you're in shady LMI world, stage one, level one is, well, should I put down 5% deposit or maybe like 15% deposit? And this is based on the LMI calculator, which you can find on Google. I've done the calculations for you. And there's one thing to note, guys, LMI is different. If you put in less deposit, mortgage insurance is higher because you're a higher risk to the bank. So for $1 million property on a 5% deposit, say you only have $50,000, the mortgage insurance is about $43,000, approximately. But say, for example, you have 15% deposit and you bought a property for $600,000, okay? The deposit, is $90,000. More money inputted. Therefore, the mortgage insurance is only $6,000. So the next the fuck question you ask is, the fuck do I do, right? Do I pay mortgage insurance and put in a less deposit, or do I pay a bigger deposit, for example, 20% to avoid that? The fuck do I know? Nah, jokes. People ask me this question every single day. Let me show you the calculations. Let's go to pay or not pay LMI based on a 500,000 property example. So say you don't want to pay mortgage insurance or you don't need to pay mortgage insurance because your parents carked it and they gave you a huge inheritance. I don't know. So basically on a $500,000 property for a 20% deposit, it's $100K. So the loan will be $400,000 and mortgage insurance is zero because you're bloody rich. But say you are the 99% of people that I talk to that are not entitled to generational wealth and you're considering, maybe I should fork out mortgage insurance. So what happens is to put down mortgage insurance, you put down 10% deposit, which is $50,000. The loan will be $450,000 and the LMI is only $8,500 once off payment. And sometimes you can borrow that from the bank. But that's just two extremes. What if you're thinking, hey, maybe I should take up insurance rather than saving up for that money and wait until I have the money to buy it? Well, let me show you the example if you were to do that. Now, I'll point out the pros and numerous cons of doing that, which is basically you don't have the money yet, you don't want to pay mortgage insurance, but you want to save for it. Okay, well, the pro is if you do that, well, obviously you don't need to, forego $8,500. The cons of that is you got to ask yourself, how long would it take you to save the other $50,000? Because right now you only have $50,000, but you need $100,000 to not pay mortgage insurance. And for example, if you save $12,500 a year, you need 4 years to avoid mortgage insurance to make up the other difference to make $100K. And then you got to also think in long sight, in 4 years, you'll be renting for 4 years, another 4 years. And also, you have 4 years on not paying off your own mortgage if you had a mortgage today. And plus, you have 4 years on not building equity in your property if you bought today. And plus, if the property market keeps rising, as you can see in the last 2 or 3 years, and say hypothetically by 5%, which is very conservative, by 2028, the $500,000 property is no longer $500,000. Mario! So maybe there are perks of utilizing mortgage insurance to get into the property market. And also, if you're a first home buyer, you can use the first home guarantee scheme, which if you earn under $125,000 per year as a single or $220,000 a year as a couple, the government will pay the mortgage insurance for you. The question I want to ask you guys, as I sit on the shoulder of the beautiful anime version of myself as the devil's advocate, do I pay LMI or not pay LMI? Jump in the comments, let me know what you think.